Hello folks, welcome back. Today we're going to take a look at Friday trade, and I think it's probably one of my favorite setup to take. So let's get started. So we start from the weekly time frame. We want to see the higher time frame first before going to 1 minute and 5 minute to looking for entry. Okay. So look to the left. What do we see here? Fair value gaps on the weekly time frame. This is what I look at it as drawn liquidity. It draw liquidity to run into that fair value gaps. But as you can see right here, we do not reach to that fair value gap yet, right? If you look to the left, what do we see? We have this wick from this low to this high. The middle point of it, what is this? The consequent encroachment. Okay, so you want to use it, use the Fibonacci tool. You're gonna put the low, gonna drag it to the high. Okay, so you're gonna use it as a medium to find a consequent encroachment here, right? So you see the middle point of that is the 50% point. That is the consequent encroachment. Okay, look to the left. What do we see? Price go right through it. Yes, it go through it, but the wick go through it, but the body close below. So when you see price going to this wick right here, because remember this is the day that we take a look today is Friday. So the Monday, I think it's already go through around Wednesday. It go through this already. So it makes sense that it pull back on Friday. So let's go to the daily time frame. So as you can see, the daily time frame we're pulling back to where? Fair value gap. Okay. So we go to this consequent encroachment on Tuesday. On Friday, on Wednesday, it consolidate here a little bit. On Thursday, it reversed. And on Friday, we still stay around this consequent encroachment on the daily time frame. Okay, so the same thing, consequent encroachment is can use both fair value gaps and wick. Okay, so to find the consequent encroachment of this daily time frame, you use the same thing, which is the Fibonacci tool. You're gonna put it on the top of this candle. You put it and you're gonna drag it to where? To the low of this third candle right here. Okay, so the second candle, you want to see the fair value gaps between it. You're gonna put a line, right? A tool, which is this one, trend line. You're gonna put it and you're gonna drag that. You can see that when you drag this to the other side, this is where price come back on Thursday and it's reject from there. Okay, so that is how you find the consequent encroachment on the daily time frame. Any time frame, you can use that technique to find the consequent encroachment. Why do we draw consequent encroachment? The reason we draw it is because we can understand when price come back into it, we might see a rejection and go higher, or it can use as liquidity, draw on liquidity. You see that when after rejecting the the consequent encroachment on the weekly time frame, it pull back into the consequent encroachment on the daily time frame. So it can use as draw on liquidity and also can use as a target, just like the weekly consequent encroachment. It work as a target when price try to reach it, touch it, and reverse. Again, look at the body of it. The wick go through it, yes, but the body of it close below. Look at that. That is precision right there. Okay, it's not random. It is precision. So after it come back, after it come back to the consequent encroachment on the daily time frame here, what we're going to do? Okay, that's when we have to go to smaller time frame to understand more. Okay, so now let's go to 1 hour time frame here. So on the hour time frame, you can see that we have this fair value gaps here, and this red box here is the 15-minute fair value gap, I guess. And here, the blue line that I draw on the daily time frame, that's it right there. You see, it come back to on Thursday. It come back to it, and it give a little bit of reactions. So if you never draw that blue line on the daily time frame, which is the consequent encroachment, you never understand why is the price rejecting right here, why price going back higher. You're never going to know. But if you understand the concept, now when you draw it out, you see, okay, the reason it go up here because it going into this blue line, which is a consequent encroachment on the daily time frame. You understand why price moving. If you never drawn this, you're never going to understand. Okay, so let's go to the 5-minute time frame here. So on the 5-minute time frame, you can see that on the left side we have this fair value gaps right here, and price starting to rally higher because it react from this concept encroachment on the daily time frame that we just drew. Okay, so you understand why is this going up. A lot of people don't understand why is this going up. The reason is that it's reacting from the daily time frame concept encroachment. Okay, well, this is the line here. I put it to make you easy to see, which is the 9:30 open. The market open, it's rally a little bit higher, and then it going to the downside. Take out this low. Okay, so let's go back to the 1 minute time frame here. So on a 1 minute time frame, you can see that we have this, slightly liquidity sweep here. Take out and then come back. Fair value gaps, right there. Come back into it, go into the downside. So I was not able to get in here because I think we could see some more, liquidity sweep. I have to either wait for this break of structure or more liquidity sweep. But as you can see, we never get that one more time sweep to the upside. But I was waiting for a market structure shift. If I don't see the sweep, which we see here, come down, it take out this low right here, go into the downside and reverse right back. Okay, so at this point, I was just thinking it's really messy, right? Price is not showing any fair value gaps in here. I don't want to trade at this point. I was waiting. So after it breaks to the downside here, I was waiting for it to come back because I believe that when it come back to this bearish breaker here, so I was thinking that price would continue to the downside. Okay, and I was waiting at this point. There's nothing to entry. We have this really nice fair value gaps here, but it was nothing in the 1 minute time frame. So I was waiting and waiting and waiting until we have this 130. We have this really nice high, and then price starting to consolidate. Okay, so after it consolidate, it coming back from 1245, it's starting to climbing back, creating this nice fair value gaps, going back again, another fair value gaps here, going back again until we come back and take out this New York lunch buy side liquidity. So what is the New York lunch buy side liquidity? It is the liquidity where you can look for liquidity sweep and then going the opposite way. It happened a lot, and this is probably one of my favorite entry that I can use, or my setup that I use to trade a lot of the time, is the New York lunch sweep. So it doesn't has to be 12 p.m. to 1 p.m. Like precise. Like this one here, you can see this high is 11:30, so it's not 12 p.m. but it's fine. It's around the same area. You can use it as liquidity sweep. So when I see this, I was waiting for it to sweep, and then we run into the bearish order block. Okay, so after you take this liquidity and it run into this bearish order block, to me this is a really good entry setup to get in. Okay, so at this point, when it touches this concept encroachment of the bearish breaker, so you see that we have another bearish breaker here. You can use the concept encroachment, project that out here. You see that it respect that beautifully. Okay, let's do that real quick. So we have the Fibonacci tool, drag that out, and then you use the 50% point. The same thing here, gonna drag that out, and you see that it beautifully come back to where? To the concept encroachment of that bearish order block. Sorry, a bearish breaker. Let's go to the 1 minute here. You see, beautiful, it come back to that and start to go lower. So right here you can see we have a market structure shift to the downside. I was waiting at this point. The reason why I get in a little bit late, because I was waiting for price to come back to these fair value gaps. When it break to the downside, I was waiting for it to come back to this fair value gaps. But like you see, it's never come back. And I was like, it's fine, I'm just gonna wait more. And we have another fair value gaps here, right here. Also, we take out this low and it come back. I didn't take this trade either. So we're going down one more time. And this time I was go back to the 5 minute. And then I seeing this one right here. I see this fair value gaps. Price go through it. You see that when price go through a fair value gaps like this, really it's showing a big displacement to the downside through a fair value gaps like this. And when it come back, this is what we call a inversion fair value gaps. When I see this thing here, I was waiting for it to come back and looking for that entry. So at this point, I go back to 1 minute time frame. So I switch between 5 and 1 minute a lot between these two time frame before I entry, because it's really important to see the 5 minute time frame and also the 1 minute time frame. You don't want just to, in 1 minute time frame, it just you too zoomed in, and that could really, difficult to understand the whole pictures. So this one here, which is a inversion fair value gaps, I'm waiting for it to come back. You see that price not touch into it, but it's fine because I can see that we have this, really nice. This is not a bearish breaker here, but I can see that we have coming back to this area, which is valid to me, and it break to the downside right here, and it create this, market structure shift right there, coming back. Also another inversion fair value gap in here. It's just too small, but right there, another inversion fair value gaps. Price never go into it, but it come down here and create these fair value gaps right there. Okay, and this is where price going back a little bit, just a little bit, and then come back. This is where I enter my position, and I targeting these lows right here. Okay, if you go back to the 5 minute time frame, you see that we have equal lows. It was a really, late entry. The best, the perfect entry would be up here, but it's fine if you still hit our target, right? So we have this low here, this low, which it not yet taken out this low. For me, I see it as a equal low, and price, as you can see, it go right through it to the downside. It also come back to this low here as well, because this low right here, it's not taking out this low. You see that when we have the equal low like that, it's really, it acts as a magnet. It draw liquidity to it, right? So that's right there my target, and it smashed the target really handsomely. Okay, so that is the overall trade that I took. Missed this position here, also missed the position here as well, but it's totally fine because, our goal is to make money, and it's not to get into the perfect time or whatever. It's just you understand the market and you'll be able to execute it, and that's what matters. Okay, that's it for today's video. I hope you enjoy, and I'll see you guys in the next video.